Good morning. It's Monday, November 3rd. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So U.S. equity futures are off to a solid start in November, with the S&P 500 up for 6 straight months and the NASDAQ up 7. This is mainly fueled by strong tech earnings and easing U.S.-China trade tensions. The S&P 500 futures are up 0.3%, while the NASDAQ 100 is up over 0.5%. This comes at 5:30 a.m. Central Time. In other assets, you're seeing oil prices fluctuate about a dollar range here, sitting at 60.83 with the high being 61.50, the low being 60.59 after OPEC Plus signaled that it'll pause output increases in the next quarter. The decision to halt the production hikes from January reflects expectations of a seasonal slowdown, with widespread forecasts for excess supply into next year. Looking at some economic data, investors are set to rely again on private data this week with the government shutdown. We should see ISM manufacturing index here on Monday and then ADP employment figures on Wednesday. Now shifting to the precious metals markets and the ETF flows, we saw ETFs, they reduced their gold holdings by about 909,000 troy ounces last week. They also reduced silver by about 10.4 million ounces. That's a big sell-off on the silver as far as ETF flows. Looking at ETFs, also they reduced platinum holdings by about 8,000 troy ounces and palladium by about 2,700. Looking at China in focus here, China's manufacturing activity expanded less than forecasted in October. That's what a private survey showed. This adds to worrying signs about the economy's momentum as the year winds down. You look at China's official manufacturing PMI, it fell to 49 in October, dropping the most in 6 months, with new orders shrinking the most in 2023. What you want to keep an eye on is the copper market. Copper slightly lower on the overnight session here, sitting at 508, really pulling back here after having a nice move up. Now it's unchanged and relatively muted recently here, with your key support coming in just below that $5 mark at 496. China is also ending a gold tax break, and this is a setback for consumers. It is one of the world's top bullion markets. The U.S. is expected to suspend port fees for the year on China-linked vessels starting next week. You look at China, it's reportedly seeking to buy U.S. wheat for the first time in a year. So you've got wheat up 7 cents overnight, continuing to break out. Your support's going to be the 50-day moving average on wheat at 517, and then 502 would be your trend reversal point. And this comes after the Asian nation resumed purchases of U.S. soybeans. So look at soybeans overnight, up about 5 cents at 11.20. Big breakout, and it was really when soybeans sold off below that $10 mark, President Donald Trump came out and he signaled that he was working with China to get them to start to purchase some of those soybeans. And we saw that future reverse higher. Since then, consolidating and now building strength on some of these actual shipments taking place over to China. You look at some of the markets, the trends in the FX markets, the dollar's up 9 at 99.72, and it's bullish against the euro, the yen, the pound, and the Canadian dollar. That also makes up much of the basket here with the weightings. The euro's 57.6%, the yen is 13.6%, the pound's 11.9%, and the Canadian dollar is about 9.1%. So this makes up almost 80 to 90% of that basket and that inverse basket against the dollar index. You look at 10-year treasury yields, they're declining 2 basis points, 407. My opinion is that exploiting these higher yields is really your next best trade position setup here, an opportunity, as we see inflation declining in October. If we do get that next CPI report, and that should drive yields back below the 4%. You look at the volatility index, that's sinking 1.5% at 1881. That's down 29 ticks and well below that key level of resistance at 20. Now you look at gold volatility, that's at 2266. It's continuing to decline. We're still over the 20 mark, which means that it will be choppy in that gold market, but we're nowhere near that 30 where we saw last Thursday at 32.95, where you had significant volatility of $150 in a day. Now, gold's key support's going to be 39.17, with resistance also dropping to 4,100. You look at the silver market, that support is 45.75 with resistance at 49.79. Looking at U.S. equities, the global markets here, Europe and Asia, we see European stocks, they were muted, while Asian stocks rose. Looking at the earnings here, out of the 318 S&P 500 companies that have reported earnings so far, 83% have managed to beat analyst forecasts, and only 13% have missed. The S&P 500 is on pace for 13% earnings growth. That's up from 7.2 at the beginning of October. And U.S. earnings are surging across the board with the median stock in the Russell 3000 on track for its fastest growth since the third quarter of 2021. You look at the Russell 2000 running into resistance at 2,500, but still significant gains recently. And that's been one of the key areas that people want to focus on is those small caps because that rally is starting to broaden out quite a bit. Now, what are the markets thinking about Fed interest rate cuts? You will have two Fed speakers here today. You'll have Daly and Cook. And then looking at the CME's Fed Watch tool, that December 9th, 10th meeting, that's really in focus after Jerome Powell threw water on that fire here for us to get more interest rate cuts, and it really came off on those expectations. So now the markets are seeing about a 69.3% probability that the Fed will cut rates 25 basis points at the December meeting. You go back 1 week ago, that was 94.4%, and that's according to CME's Fed Watch tool. Now getting deeper in the precious metals flows, total gold held by ETFs rose 17% this year to 97.3 million ounces, but they did cut some on Friday, about 225,000 ounces. And then you look at the silver market here, total silver held by ETFs rose 14% this year, bringing this year's net purchases to 97.7 million ounces, and they did cut 1.8 million ounces in that last trading session. What's interesting is the gold silver ratio now dropping below 83 to 1 and back at 82 to 1. So if you have any questions on futures or option trading, or you'd like to open up an account with Blue Line Futures, send an email to info@bluelinefutures.com. And remember that futures and option trading does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.